Why does the strength of a currency really matter, and how can understanding that information help you with your trading? Let's talk about that and more right now. Hi Forex traders, it's Andrew Mitchem here, owner of the Forex Trading Coach with video and podcast number 292. Now I want to talk about the importance of understanding strength and weakness within a currency pair and how that can help you with your own trading. I get asked quite often, hey Andrew, why do you put importance on the strength of a currency? How does it affect my trading? Why does it matter? What's the relevance? And it's something, when you think about the logic of understanding strength and weakness, it's something that can dramatically help almost all Forex traders. So regardless of your style of trading or what your current strategy is, understanding the potential and the likely strength of a currency for that upcoming day, I believe can certainly help improve your results. So luckily for you, I publish, and I've done so every day for the last 7 or 8 years, free information on my website where I published at 5 o'clock New York time, based off the close of the daily charts, the likely strength and weakness analysis for the upcoming 24 hours. So it's information that you can use to help better trade for that upcoming day, that new day. Now, why does it matter? Well, one of the things you'll notice out there is that a lot of people talk in hindsight. They say, economists are very good at it, aren't they? They'll say, yesterday the British pound did this, or the US dollar did this, or there was some economic event and the result was better or worse than expected, and this is what happened. Now, a lot of that really, quite honestly, is useless information, because although it helps us to understand why something moved, it doesn't help us with taking new positions, not very much. However, if you can understand that, let's say the US dollar is looking, let's say, really weak and the euro is looking really strong, the likelihood is that the euro against the US dollar is heading upwards. So if you take that out to a bigger picture, let's say if you look at the monthly charts and you're seeing the euro against the US dollar very strong, and even the weekly charts, you've seen that the weekly charts are showing a lot of strength also, and so are the daily charts. Now, if you're trading on any time frame chart, let's say a 4-hour chart for example, and you're seeing all the strength in the euro against the US dollar, and you're then seeing the euro US dollar on a 4-hour chart starting to pull back, and then it shows you a good strong bullish price action candle. It needs other things setting up, like it needs to be bouncing at a good level, it needs a few extra things, trendline breaks, etc., to back it up even further. But let's say you get all those things lining up together. You've got almost like the perfect thing setting up there. You've got the bigger picture strength, you've got like the daily strength, and now on the shorter time frame chart you're starting to see strength as well, all showing the same direction. Let's say also, just for instance, that the pound was also strong against the US, and so was the yen, and so was the franc, and so was the Aussie and the Kiwi, let's say. And what that's telling you then is that the US dollar right now is really, really weak. Let's say the euro against the Canadian, against, let's say, the yen or the franc was also very strong. So what it's showing you is there's a massive amount of all-round strength in the euro, a massive amount of all-round weakness in the US dollar. So you're seeing that on the currency pair as a strength on bigger pictures, monthly, weekly, daily, and now down onto your 4-hour chart as well. Really, when you think about it, it has to all add up to say, this is going to be a very high probability trade. Now, of course, I'm assuming that you have a good strategy in the actual buy position that you're looking at taking. It's a good setup technically anyway. But all it's doing is saying we're now buying after a pullback, let's say on the 4-hour charts or 1-hour charts, whatever it is you're trading. But it's with the bigger picture, and that's where trading with strength and weakness can really help you. So have a look on the free posts that I put on my website daily. Now, of course, clients get a lot more information. They get specific trades. They get information on the weekly charts and the monthly charts as well. I don't publish all that on the free information, just the daily charts. But have a look and it will dramatically increase your trading performance, because logic suggests that if the longer, bigger picture is saying a currency pair is likely to be moving up, and you're also taking a shorter time frame chart in that same direction, it kind of stands to reason that you have a higher probability chance of success. So that's how you can best use strength and weakness. It's a massive thing. Unfortunately, not a lot of people actually use it to their advantage. But when you do, it can dramatically help your results. So once again, this is Andrew Mitchem from the Forex Trading Coach. I'll see you this time next week.